Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of this week's biggest stories in the mining industry. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and of course, leave us a comment below. Let's get into it.
The gold price edged higher this week, benefiting from increased investor uncertainty as U.S. tariffs went into effect for dozens of countries on August 7th. Rates start at 10% and rise as high as 50% for countries like Brazil. The U.S. is still in talks with Canada, China, and Mexico, its top 3 trading partners. Commenting on the news, President Donald Trump took to his social media platform Truth Social, saying that billions of dollars will now start flowing into the U.S. Aside from that, there are hopes that the tariffs will provide a boost for domestic businesses. However, critics argue that the tariffs will be passed on to American consumers who are already dealing with the ongoing effects of inflation. Going back to gold, the yellow metal is also being supported by strong expectations that the U.S. Federal Reserve will cut interest rates when it meets in September. This comes after weaker than expected July jobs data released last week. Only 73,000 jobs were added for the month, and in addition to that, the Bureau of Labor Statistics revised down numbers for May and June, saying 258,000 fewer jobs were created. Trump fired the Bureau's Commissioner of Labor Statistics in response, saying that the numbers weren't accurate. Fed Chair Jerome Powell also found himself in the line of fire, with the president suggesting that he too should be put out to pasture. The Fed also turned heads in the resource space this week with the release of an article on gold revaluation. In it, a principal economist looks at rare cases when countries use proceeds from valuation gains on gold and foreign exchange reserves. While precious metals market watchers have noted that the Fed publishing research on gold revaluation doesn't mean it's going to happen in the US, it's still seen as significant that the central bank is mentioning it at all. The People's Bank of China continued snapping up gold in July, adding to its reserves of the yellow metal for the 9th month in a row. According to Bloomberg, the Asian nation now holds 73.96 million ounces of gold, an increase of 60,000 ounces. China is also reportedly adding to its platinum holdings, with data from Standard Chartered showing that it brought in 1.2 million ounces in Q2. A separate article from Bloomberg indicates that state-owned entity China Platinum is making most of the purchases, meaning it's difficult to know who's really buying the metal. The US is picking up platinum too, while London and Zurich are seeing shortfalls of the metal. With lease rates down from over 35% last month but still elevated at 10%, experts are calling for continued tightness in the market. After years of range-bound trading, the platinum price began breaking out in mid-May, eventually surpassing $14.70 per ounce and reaching highs not seen in over a decade. First Quantum Minerals will receive a $1 billion upfront cash payment from Royal Gold under a gold streaming deal for its Kansanshi mine. According to First Quantum, the agreement announced on August 5th will allow it to retain exposure to all the asset's copper output and most of its gold production. Located in Zambia, Kansanshi is the company's flagship operation as well as Africa's largest copper mine. It produced about 170,000 metric tons of copper and 105,000 ounces of gold in 2024, with an expansion in the final stages of commissioning. The amount of gold First Quantum delivers to Royal Gold will be based on its copper output. And in addition to the $1 billion initial payment from Royal Gold, First Quantum will receive 20% of the gold spot price for each ounce delivered, with that amount rising to 35% in the event that specific milestones are met.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.